Good morning, traders. A bit of a delay here in getting started. This is another early show today. It is Friday, October 28th, 2022. Thanks for joining me and happy Friday. This is episode number 2346. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Given the disruption to my routine and process here because of the scheduling issues between my wife's training and my own work. I don't have a summary sheet prepared. I'm going to dive right into the markets here and cover what is expected for today. This is expected to be a very short a very short trader bite. This morning, however, just a quick overview of where we are. The NASDAQ from settlement is down 1.08%. The Russell is actually almost at unchanged, only down at 9 basis points. The ES is down just 58 basis points or 22 points, and the Dow is down just 5 basis points or 16 points, almost unchanged. The big news, of course, is Amazon announcing after the close yesterday and just getting absolutely hammered this morning. Its stock is currently, let me look at the pre-market here. Its stock was down as much as I think 17%. 17%. It's currently down about 13.64%, trading at 110.96 in the pre-market. On the close yesterday, in the pre-market this morning, it's trading at $95.85. 95.85. So that's where a lot of it comes from. Looking at crude is off today by about 1% or 85 cents. And maybe I'll have a chance to talk about crude again. I need to make sure that this is a pretty short show. Let's take a look at what the S&P has done. So we had a really decent run up this week. This week, as expected, we broke out of this several days of balance at man, I am like really tired. Broke out of several days of balance, and then we started to run up. We pushed into this 90. We moved from lower balance to upper balance, and then we immediately sold off on the hit of 90. And then yesterday, as expected, we broke the one-time framing up. If you recall in yesterday's Trader Bite, I talked about it, pushing higher, getting to 90, and then closing quite weak. And the expectation is it's likely to explore down. So the primary scenario yesterday was for it to very, very likely push lower into the 3820 and the 3800. It's currently trading at 3798 right now. So we managed to get, we ended up settling at 3819. So we managed to get that target at 3820. And I also talked about this first the 54 and then the 60 being key areas right here, right here, right there. These are expected to be key areas of resistance here on the S&P, and that worked out pretty well. Here's what it looks like in the big picture. So we balanced out for a little bit. We had, we talked about this megaphone formation, and then we opened in a gap, tested down into the range, closed the singles, and then finished strong on this day, brings us into the middle balance, and then we opened higher against the prior day's value right here, pushed higher, very strong close, and then we had this day where this was Wednesday, where we opened in range, in value, pushed to the the 90 area, and then we ended up closing lower, bringing, you can see this better in the volume profile. The volume profile again versus market profile. Volume profile is just a lot more granular, a lot more accurate as far as how much of price we have traded as opposed to how much of time have we traded at a price. And so the price action showed that we had a higher high, higher low, but value did not move up. And so the expectation coming into yesterday is we are likely to test higher but finish down, and that's exactly what we got. So the ES is forming a rounded top here, and Amazon has helped make that happen even more so. So to me, the ES has 3750 in here, 3750 as a key area, key test area, and then we get into where we were before in this 45. So this 45 to 50 area is key support in the ES. Again, we're trading at 3,800, so this is about 50 points away. So nothing too fantastical here in terms of what the S&P is doing. It is pulling back, and if we look at the bigger picture, let's pull this back quite a bit, we'll see that we have very simply transitioned from lower balance. We built this middle balance. We retested this lower balance. We had an excess low. Look at that excess low. Opened at the low, finished at the high. This is a big day here. This was Thursday a couple weeks ago. I remember because I was sick this day where we opened down like 1% or 2%. We finished up 2%. Really an outstanding day, big day. And then the next day tried to take that back, was unable. We still have some single prints remaining down below, and then we kind of traded in this lower distribution with this megaphone formation, and we finally pushed into the middle bounce, and then now we got to the upper bounce. This 90 is around the value high of this upper bounce area up here, and we're shifting down. So that's all we've done is just that. We're still not, people are like, people have talked about this being the big rally and so on, but really we haven't moved away very much from where we were. If we look at the intraday, this is volume based. You could see that really this is just kind of an inverted head and shoulder that's being formed, potentially pushing higher. But look, let's not get ahead of what the information we actually have. All we've done is moved into this balance zone right here. We hit this naked point of control, 92, and we have come off. We are likely to retest this zone down here. We've tested it already at the 3,800, and then if we get below there, 3,750. Right in here is next. So let's keep the big picture in mind. This profile here is just plotting whatever you see on the left, whatever volume you see on the left, and you can see that we've gone through these transitions. This is what I love about the volume profile. It just makes it really obvious where the cutoff points are, right? So we've kind of transitioned from high volume to low volume, right? We settled right into low volume yesterday, and we're moving back in high volume. So the question becomes, where is that high volume point? The immediate high volume point is around 80 this morning, and then the support underneath there, as I said, is 45 to 50. Those are the key prices to watch for support below this morning. Above us, you're back at the 20. Okay, so we're back at the 20. That's yesterday's settlement. Today, we're looking for a potential gap to settle trade. It's very possible that it'll do that. Here's what yesterday looked out like. So this is the RTH profile. You notice it doesn't have any volume under here because that's a whole lot of rotations and trading that occurred right between the cash close, the cash close, and the session open. So there's a kind of a void in here that was caused by Amazon, and we've moved quite a ways on pretty on after the close, and we have an SOC basically right back at the settlement price of 38.19. So we're opening in a gap to yesterday this morning. So let's shift this over here. So we're opening to a gap. We're trading this 95 area. We've moved to 13 in the overnight session. We almost got to yesterday's low, which is at 1350. We missed it just by a bit. So we're opening in a bit of a gap, and to me, this is very likely to be responsive. The key trade, the number one trade today, is a gap to settle setup. Okay, the overall structure, the size of the negative delta right now, all of that is not really excessive or extremely supportive of a push lower. So the expectation is it's likely to attempt to push lower, and I'm looking for it to squeeze back into the 38.20, and that brings us back into equilibrium. It cancels Amazon's news on the S&P 500, and then the next price to test is the naked point of control at 38.25. But if you look at this profile here in the overnight session, it's completely balanced, and we're sitting on top of the point of control is right here. Full session VWAP, full session mid, all within this 3795 to 3800 range, and we're sitting on top of it. So to me, this is a classic gap to settle kind of setup, high probability setup. I'm not telling you to leverage up your account and buy on the open. We still have to see what the opening print shows and how the opening swing develops, and which side breaks the opening swing first to decide which side the bias is likely to be on. But as far as I'm concerned, this is what it's setting up to do. So here's all that we've done. So now we're starting to form, we're rolling over ourselves. So this is starting to look like it is forming another composite, right? So we're going to merge these together into a micro composite to see where the market's trading. Look at how ugly that is. That's just a really disjointed micro composite. So you could see here that it's got a lot on top of it. Again, we're trading here. We settled at 38.19, and we have this heavy presence there, heavy resistance there at 38.42. That's our backstop, or the key area that the market has to take over in order to make any progress on the buy side. Okay, so what are the scenarios for today? Quick pause. I need to share these. Let me see if I got them. Yes. So yesterday, in the absence of this being a live show, yesterday the Polling for Charity Challenge took place, and many of you voted. We got approximately 77 or 80 votes. It was pretty low. I'm looking for 200. Whoa, look at that. Look at the news here pushing. Looks like personal income and spending came out. Personal income much higher, 0.4 versus 0.2. Personal spending much higher, 0.6 versus 0.3. The employment cost index was expected at 1.2, came in at 1.2. PCE price index 6.2 versus 6.1 expected. So we're getting some pretty good movement here. Let's look at this. Look at this thing. This is 7:30 right here. This is where the news came out, and a big pop, and it's pulling back. So this is this is an impulse up right here. This is an impulse up right here, and so any retest of the 38.05 is a buy on the first try. but be careful because it's news and it's very likely to come back to the SOC. The SOC for this is around 37.95. So be careful here. It's if it's not able to get back up to the 38.28, it's very likely to find itself at 37.95. This changes things a little bit. Anyway, let's go over this real quick. I know the timing is not great, but we took 5 trades. You voted that it will the S&P will settle below 38.50. It settled at 38.19. That's a hit. We got paid $20 for that. The NQ, this is in the live charity account for St. Jude. The NQ, you voted that it'll likely settle below 11,400. It settled at 11,235. That's a hit. Voted for the RTY to settle below 1810. It settled just 2 ticks above the 1810 at 1820. That's a miss. We lose on that. And then crude oil, you voted to settle above, that it'll settle above 89. It settled at 89.08, so that makes up for the RTY. And then the 6E, you voted that it'll settle above 1.0075. It actually settled below. The 6E was tricky because we had ECB yesterday, and so the strike chosen was already canceled by the time the vote took place. Here's what I'm expecting this morning. So let's turn on extended. Here's the extended data, and look at that price movement. This is a 30-minute chart. So the expectation this morning, while this loads, because I need to get going, the expectation, this changes things. I really was looking for it to open below 3,800. The expectation is this is very likely to get back down here below 3,800. We'll see. It's trading up here now. We'll see how it does. The expectation is to push lower. See, it already kind of did this trade to push lower out of imbalance against the overnight point of control, full session VWAP, full session mid, and then I'm looking for responsive buying back to the 38.20. This is really important, this test of the 20 here from below, and then push to 25 for the prior point of control test, and then it's likely to just sit in the middle here and get back into the fat part of the composite at in the 40 area. This is what I'm looking for today. I'm looking for the market to be responsive. Barring that, the better trade is if it isn't responsive, and therefore it is an open auction that pushes higher, does get to the settlement, and then you get an impulse down. So I'm looking for the big move. Where's the big move? Back to the open, consolidates at the open, and then starts to give up. And now we're looking for it to get back down into the 65 and the 50 before it settles out. It is Friday, so there's going to be some balancing on the close here, but we'll see. I mean, these are the 2 key areas that we're looking for, 2 key plays that we're looking for from where we are. It's kind of getting back into the prior day's range. It kind of throws a wrench in my plans based on this release. We still have pending home sales at 10, and we still have Michigan sentiment at 10. Michigan sentiment's final. It's not as important as the prelim, but the big numbers here, personal income spending and PCE price index, are behind us, and they've kind of shaken the market already. Okay, so I'll leave you with that. Good luck. Don't forget to hit the like button before you leave. It's Friday. It's like Friday. Make sure to hit the like button. And for those of you who participated and voted yesterday for the Polling for Charity Challenge, thank you for doing that. The account's still holding up pretty well. We're still figuring this process out. We might have to make some adjustments to that program, but at the end of the year, we expect to give approximately $10,000 to St. Jude on our annual push to give to charity at the end of the year like we did last year. Last year was $10,000 as well, and that's all being done with your support. Charity is a really important part of being a trader. The giving makes space for more to come in. You can't fill a full cup, so we empty it by helping children suffering with cancer and so on. in order for our cup to be empty enough for more opportunity to come in, and that opportunity comes from you, the trader. Good luck, and I'll catch you on Monday morning. Take care.